Good afternoon, everybody, and thank you for joining us today. My name is Dan Zinn. I'm the General Counsel of OTC Markets Group, and I am joined here by an all-star panel for this virtual panel discussion, a virtual coffee break, if you will, to discuss small businesses in the public markets. I'm going to get to introductions of everybody you see on your screen in just a few moments, but I want to go over a couple of housekeeping items first. First and foremost, this session is being recorded, which means all of you will have a chance to come back and listen to parts you may have missed or things you want to hear again. And we're going to make it available to people who were not able to join us in the live session as well. But partly because we're recording, and partly because we want to maintain the flow of discussion, we're going to ask everybody to remain on mute for the entirety of the session. We have some capacity to do that on our end, but we ask that everybody does that on their end as well. If you want to interact with the participants, and we hope that you do, there should be a box on your screen that allows you to enter written questions. We will see those questions as soon as you put them in. We're going to try to reserve some time towards the end of the discussion to go through questions. It's possible we'll have an opportunity to sprinkle them in as the conversation goes on. To the extent you can, let us know which panelist you'd like to direct your question towards. That way, we'll be sure to get you the right information. And also, in the event we're not able to get to questions or we're not able to get to your specific question, we'll have an opportunity to distribute those to the panelists and allow everybody to maybe continue communicating after the panel is over. Let me get to some relatively quick introductions, and then I'll turn it over to the folks you really want to hear from. So we are thrilled to have with us today Martha Miller, the SEC's advocate for small business capital formation. Martha has been in that role, the originator of that role at the SEC since 2018. And she and her office have done a lot more than just get up and running over the past couple of years, but they really run the gamut in terms of the issues they get involved in with respect to small businesses, in terms of regulation, in terms of business issues. They do any number of things highlighted, I think, probably most specifically by their Small Business Forum every year, which this year was done virtually and was, I think, the epitome of a virtual event that we should all strive to meet. But in past years has been done throughout the country in an attempt to really engage with small businesses wherever they are. We are also joined by executives from 3 OTCQX companies. And for a little bit of context, OTC Markets Group operates an alternative trading system that has roughly 11,000 OTC equity securities. And in order to organize that, we have created 3 levels of market, OTCQX, OTCQB, and Pink. OTCQX is at the highest level, which means that all of the companies represented here are have a timeliness and sufficiency of disclosure, have corporate governance, and have met quantitative standards to qualify for that highest category. That means you are all in the presence of people who can give you a really good idea of what it's like to be a small business interacting with investors, to deal with public company regulations, public company business issues. We are really bringing you the best of the best. And I will introduce them as I see them on my screen, and then like I said, I'll give everybody a chance to introduce themselves a little bit more. We have Lauren Ronaldi, who is the president and CFO of First Resource Bank in Pennsylvania. Lauren has been with the bank for more than 15 years, and last year became president of the bank. Besides her activities with the bank, Lauren has also been a tireless advocate with us in terms of our OTCQX advisory committee, and even coming down to Washington, D.C. and speaking with regulators and legislators in person to talk about issues impacting not only community banks and the specific space that she operates in, but also just small businesses more generally. So Lauren, thank you for joining. We're very happy to have you. We are also joined by Bob Schermer. Bob is the CEO of Meritage Hospitality Group. Meritage operates hundreds of Wendy's restaurants. I'll let Bob give you the exact number. But Bob has been the CEO there since 1998, and like Lauren, has been heavily involved through the past several years in our OTCQX advisory committee, in being a voice and an advocate for the issues faced not only by his company, but by other companies on our market and really just smaller companies everywhere. So we're excited to have Bob's perspective here as well. Last, but certainly not least, is Steve Bagley. Steve is the CFO of Sono-Tek. And while I might be able to pass at describing the businesses of Meritage and First Resource. I'm going to let Steve do the heavy lifting in describing Sono-Tek. I can read the words on the page. They develop and manufacture ultrasonic coating for a variety of medical, electronic, industrial products. But Steve is going to walk you through that one a lot better than I possibly could. Steve has been the CFO there since 2005, and similar to Lauren and Bob, has been really active with our OTCQX community. And so really thrilled to bring this panel together. I'm going to now let everybody introduce themselves and step aside for a moment. We'll start with Martha, who can hopefully talk a little bit more about her background and the office of the Small Business Advocate. So take it away, Martha.
Oh, thank you, Dan. I appreciate the warm introduction. And a huge thank you to everybody here today and to the OTC Markets team, in particular, Dan, Cass, Josette, and Christy for all the logistics making this event a virtual success. And a big thank you also to our team members. We have a couple members of our team that are on the line who are supporting behind the scenes today. Dan mentioned that we are a new office at the SEC. We officially started operating in January of 2019. So we're about a year and a half in. Just as we crested 1 year of being in operations, we switched completely on strategies with virtual engagements needed in light of COVID-19. So nothing like being forced to stay nimble than when you think you finally have nailed down a strategy and you completely flip. I think that that's a common theme. As we were prepping, Lauren was talking about figuring out how to flip and prepare to address changing needs. But to what we do, we have small business in our title, and Dan highlighted a little bit about our office as an advocacy office. But I wanted to give a little bit of context of who we are and why we're here today and why do we care about smaller public companies. So just the brief background, we have a very long title, Office of the Advocate for Small Business Capital Formation. It does not roll off the tongue. And I am thrilled that Congress created us, but Congress is not known for their cheeky branding and very catchy titles. So they gave us a very long title to encapsulate that we are both an official government office, we are focused on advocacy, we're interested in capital formation, and then with small businesses. So we capture a lot of different pieces. For us, small business spans what you might associate with small businesses, your early stage startups, those that are raising small amounts of early stage capital. But we go across the private market space to those who are looking to become public companies one day. And then we also look at smaller public companies. Typically what we look at is under a public float of $250 million. But we don't draw necessarily hard lines because that is something where we recognize that there is blending of issues that are faced by smaller marketplace participants. And we're an advocacy office. And what does that mean? That means that we're not the enforcement team, we're not the rule writing team, we're not a whole lot of other different functions that you might be very familiar with the SEC. We're here trying to drive practical and pragmatic market-driven solutions to address the issues that are faced by small businesses and their investors. And that's putting it pretty simply. And the way that we do that is not by sitting in our offices in DC and coming up with just some great ideas that we think sound wonderful on a whiteboard. We engage with the marketplace participants, with people like our speakers today, with those who have dialed in, with folks like Dan and the OTC Markets team to make sure that we are bringing in marketplace validation to the process behind the scenes, both within the SEC and with Congress. So thrilled to be here today. And I would be remiss as coming from the SEC and the government if I didn't give a really lovely government disclaimer. And I think I can probably disclaim it for everybody that when any of us are speaking today, we're speaking with our own perspectives and not necessarily those of our agency or company that we work with. So with that, I think we're all covered to speak extra candidly and to have some wonderful conversations. So just again, thank you, Dan, for making this conversation happen. And Steve, Bob, and Lauren, I'm really looking forward to the dialogue today.
Thank you so much, Martha. I'm going to turn to the same order I used in my brief introduction. And I'll ask that as each of you introduce yourselves and your business, start to get into the story of how and why you became public, why you've chosen that route, why you've chosen OTCQX. I think that'll serve as a nice jumping off point for the remainder of the discussion. So Lauren, why don't you take it from here?
Sure, thanks Dan. Thanks for having me today. So my name's Lauren Ranalli. I am a co-founder of First Resource Bank. We were a new bank that was opened in 2005. right before the financial crisis, and it's been an interesting 15 years. We're currently 3 physical branches operating in suburban Philadelphia, and we have a little bit of a unique business model in that we take in over 60% of our daily deposit volume through remote deposit capture machines. So it's really allowed us to limit our physical branch footprint while continuing to grow the bank. We're about a $350 million community bank, and we went with OTCQX back in 2014. And we were originally, when we opened, we did a capital raise and had a quote on the pink sheets right away. And that was a very effective mechanism for our shareholders to be able to see a stock price and to be a little bit more open with investing in a new bank that they knew that there was going to be a market initially. And as we continued to grow the bank and we saw the 3-tier model that OTC Markets put out, we felt because we were already doing all of the financial reporting that was required to be on OTCQX as a community bank, we were already filing quarterly call reports with the FDIC, and quite honestly, we have an auditor in every other week. So we were not having any additional administrative burden of joining OTCQX. It was really a no-brainer for us, and it gave us a bit more visibility, a bit more presence. I think the pink sheets can often be equated to penny stocks, and that's certainly not what we are. And we were really intrigued by the opportunity to go to QX. And we've taken advantage of a lot of the benefits of doing that. And we've done virtual investor conferences every year through OTCQX since we've joined. And it's been a great way for us to reach out to investors in a way that we wouldn't have had prior to joining QX. So it's really been a great move for us. And we've been there for almost 6 years.
Great. Thanks, Lauren. All right, I think, Bob, you were next up in the rotation.
Well, thank you, Dan. My name is Bob Schermer, and I've been the CEO at Meritage Hospitality since 1998. In 2007, we were listed on the American Stock Exchange. So we came at this kind of from the opposite angle as from Lauren. We were already public, and they had just come out with the rules for Sarbanes-Oxley. And we were going through the additional expenses that were going to be required of our company, which at the time, back in 2007, our sales were right around 59 million. We employed 2,000 people, but our EBITDA was 2.8 million. And when we did the math on the requirements for Sarbanes-Oxley, it looked like it was going to cost us an additional $1 million. So roughly 1/3 of our total EBITDA for the year. And we went to the stockholders and said, what do you want to do? And almost to a person, they said, it's not worth being public for that amount of money. So we looked for an alternative, and I came across the OTCQX, and we very quickly became one of the 10 founding members and have been a member of the OTCQX ever since. I figure today, as I look back, we've probably saved about $15 million in expenses by trading on the OTCQX versus being a full SEC reporting company and complying with Sarbanes. And today, our sales are over $500 million, and we employ 11,000 people. So it's been a very good experience for us being listed on the OTCQX. There are challenges, which I think we're going to talk a little bit about today, but that's kind of the Meritage story.
All right, thanks, Bob. See if you can save my business description and also give yourself a more fulsome introduction.
Very good. I have notes here, of course, following up. Steve Bagley, CFO of Sono-Tek Corp. Sono-Tek's located in the Mid-Hudson Valley in New York. We're about 2 hours north of New York City. And we have approximately 68 full-time and 8 part-time employees. We are the world leader in the design and manufacture of ultrasonic coating systems. Ultrasonic coating system is one that can apply precise and uniform thin film coatings to parts and other components. Now, what we do with those is we take those and we design and customize ultrasonic coating system solutions. And what they're used in would be medical devices, check my notes here, of course, electronics, alternative energy, industrial, and emerging R&D. And the key thing about all of these, which I tried to explain to everybody last year, which was very interesting, it all began with an ultrasonic nozzle. And what the nozzle does is it takes a liquid and it flows through, and we actually atomize the liquid that flows through and breaks it into very small particles. And we can actually shape the liquid that flows through and apply it onto specific coatings as needed. Very precise, very high tech. On that note, all of our manufacturing does take place here in Hudson Valley. We have production, sales, engineering, R&D, sales and marketing rather, and administrative. We have our year ended in February. 71% of our sales were exports out of the US and Canada. And we've maintained a very good percentage of that as everything being just globally sold. What else can I possibly say? That is it right now. But I'm sorry. When I walked in in 2005. We were public at the time. We became public in 1987. And the reason for us becoming public, from what I've been told, was we had to get capital to do some marketing because we had a very good product and we needed the cash inflow. Honestly, I'm not too sure how all that came out. I came in 2005, but when I came in, we were on the OTC BB, I believe, and then up to the OTC OB. And then in 2015, we went to the QX. And I'm happy we made the jump. It was an easy jump. All of our filings are up to date. Contrary to Bob, we do the Sarbanes-Oxley. We're probably not to the magnitude that he's subject to. But that's where we're at. Thank you.
All right. Thanks, Steve. You all brought out, I think, a lot of issues that we'll explore as we go through the panel, particularly with respect to the different disclosure regimes that each of you follow, bank reporting, SEC reporting, and Bob under our alternative reporting standard. And I think the pros and cons of each will come out. But before we get there, Steve, you touched on this, and I think it's probably the main question that people get. I'd be interested in Martha's take on this as well. But when people talk about small companies, the next thought is capital raising. How are companies funding? What are they thinking about capital raising? You all as public companies might have specific thoughts from that arena. Martha, I'm curious on the questions you get and what you hear from both private and public companies. But maybe we'll turn it around. So Steve, we ended with you, but just in thinking about what the company did even prior to you being there and in going public to raise capital, is that the kind of thing that you address on an ongoing basis and that you think about for future consideration?
It's very funny. We do think about it, okay? And half the battle with all of that, of course, is if you want to go raise capital, what are you going to do with the capital? We get a number of phone calls. Hey, listen, we'll give you all the cash you need. But being on the OTC, we're looked at a little bit differently. And so a lot of those deals are less than appetizing. So it's difficult to come up and attain capital based upon where we are right now. We haven't had the need to look, but that's not saying that we will. So.
Do you think recent events, and I'll put this out for all of you as well, where we are as a certainly in a U.S. economy and a global economy with COVID and everything else, does that impact your outlook as well?
Mine, absolutely. Yes, it's going to be very difficult for a company to come along and gain suitable financing along those lines, basically because of the dollars involved, the interest, and the participation that these companies are going to require to actually have capital flow into your company. But I believe it's going to get difficult. Yes. My opinion, of course.
Lauren, Bob, I'm curious for your takes as well.
I would say my industry may impact my answer. I think banking is a little bit unique in that there are general fears about how deep, how long this recession may be, and there may be some credit components to our capital raising future. However, I do think compared to where we were to where we are now, we have better access just in having the QX versus Tank. I think there's a big difference between the two when someone looks at you as a potential investment opportunity, for sure.
Well, we're in the restaurant business, and the industry's kind of broken into three pieces due to COVID. It's kind of the challenged, the surviving, and the thriving. So it depends on which bucket you're in, and as luck would have it, we're in the thriving bucket. We have a lot of drive-throughs associated with we're in the Wendy's restaurant business. We were kind of built for this, for what's working today. So still the access to capital is an issue. And as we look at doing small tuck-in acquisitions, about out of every 4 acquisition requires additional capital for us, outside equity. And what we've done in the past is small Reg D offerings, which under the current 144 rules have a 1-year hold before the securities can be publicly traded. So there is a discount associated with that 1-year hold. So it does make the cost of capital higher than if you were a full reporting SEC public company traded on a national exchange.
Sure. I think, we hear that sort of thing from people universally, both Lauren and Bob's points, really, that there is greater access and maybe greater understanding of the OTCQX market and what that means. But also, Bob, to your point, that if you're doing a private offering, doing a private raise, that's going to come with its own set of complications. Steve, in the position that you're in as an SEC registrant, doing a more traditional capital raise under SEC rules may be an option, but it comes with the increased cost and everything that you experience as a public company reporting to the SEC. So, Martha, now that you've heard the perspectives of the small companies represented here, what sorts of issues and questions do you get a sense are really impacting the industry as a whole with respect to capital raising?
No, I think that the issues, the driving considerations and concerns and the framework through which you make decisions, that hasn't really changed. Looking at what's the cost of capital, what are the friction points, how quickly can that capital be here to meet our needs, and you're using that same paradigm for evaluating it. It's just the variables have changed. The accessibility of capital, investor tolerance for risk and how they're evaluating risk, how they're prioritizing growth versus profitability. If it is something that is investing, like, a hypothetical, I'll say, if Steve goes out and says he needs to raise capital and he's got something that is a prospective project versus something that has current revenue that would be associated with it, you have a different appetite right now, I think. And it is unclear to what Lauren was saying that we don't have the full playbook right now. And there's not a great deal of clarity on how those variables will continue to shape and evolve as we figure out the length of this period of economic uncertainty. But I think that what we're ultimately seeing is we have the same framework to make decisions. We're using a different lens for evaluating it because we see very different variables playing out. And I think that I'm particularly interested in learning today from our speakers and from those who are here. How does that differ in the smaller public company context? That's a group that we haven't heard as much from companies like the OTCQX companies. We've seen a lot of people talking about it with venture-backed companies and with startups and the challenges there. That's an area that's been really well reported on. But I'm particularly interested in understanding what are the challenges if you do have increased capital needs. What is that process going to look like, and what are you hearing? What are you expecting that to entail?
We'll open that up to the floor.
Well, I can tell you, Martha, over the last 2 or 3 years, we've seen a real tightening from broker dealers in their willingness and ability to participate in a Reg D as a placement agent. So in a typical transaction, we'll end up having to do 50 or 60% of that, placement ourselves through an existing ecosystem of investors that we know that have been, past investors with us. So the broker dealers are becoming less and less able, due to their compliance departments, to deal with OTCQX listed companies that are not SEC, like ourselves.
That's interesting feedback. Thanks for sharing
it. Yeah, I mean, I have similar. So we're not an SEC registrant, but as a bank, we've done what we affectionately call the friends and family rounds, and it's been really effective for us to. Things happen. People get divorced. People need money. They need to send a kid to college. It's really been great that they may be a firm believer in the bank. And historically, we've used the phrase, we trade out of a desk drawer, where you call the CFO and you say, hey, I need to sell my shares. Do you know anyone who can buy? And, it's really not efficient, and there's no pricing mechanism there at all. So it's such an upgrade from some previous places where I've worked where there's been no market at all. Now, you can argue liquidity is everything, and I certainly, we strive to increase our liquidity as much as we can. But having this QX listing has been a blessing that way. Now, on the contrary, not being an SEC registrant will certainly deter certain investors. Now, we've been successful in finding bank-specific investors, someone who understands our particular space, and we have institutional holders that way. And that's been effective. But in a broader market sense, the not having the SEC registration has been a deterrent at times.
Yeah.
All right, so it looks like I'm the only guy registered here in the party. So we are registrants, of course. One of the things, I think the biggest item along those lines with capital already, or having anybody come look at us, is, and this is just a resounding thing that I've found flows through this place. The brokerage houses will look twice before they look at you, because they look at the OTC. I'm just saying overall, if you're on the OTC, you get a little bit of a different perception. And the larger houses won't take our stock, okay? So it reduces the liquidity and the value in a way where it would be easier for us if we had to come out and get capital. So they look at the stock, okay, you're on OTC, but we don't like that. We are registered, our financials are up to date, go along those lines, but it's somewhat of a drawback that we have to deal with consistently. I get it from a number of our shareholders. I'm trying to put my stock in the broker in the house, but they won't take it. I've heard that. I try to sell it, can't do it. That's a huge drawback, and I think that would go hand in hand with obtaining capital right now.
Well, and Dan, I know you're our moderator. Can I put you on the spot? Is that fair game for this? Because Dan, I think
that's the most fun of all. Yeah.
Yeah, I didn't see. We talked beforehand where we agreed that there's nothing that's off limits, and what we didn't cover is making Dan into a panelist, not just a moderator. But Dan, I think one of the things that you do so well is when you come in and you meet with the SEC and with other regulators, you really represent the perspective and the experiences of the companies that are traded, whether on OTCQX or some of your other platforms, really well. To what extent are you seeing this across, a lot of different companies, and where is there a regulatory nexus where we need to be thinking about things differently as the SEC? I'd love your perspective, kind of macro, as you look at these issues that are shared with you from many companies.
Sure, and to answer the first part of that question, the issues that Steve and Bob and Lauren are talking about are certainly not specific to their companies, right? These are things that we hear from companies across the board. OTCQX, OTCQB, which are all companies that are making that current disclosure publicly available and interacting with investors in the right way, even though their metric and company size might look a little bit different. A lot of it, as you know, Martha, from our perspective, boils down to, I think, the way people understand or maybe misunderstand what it is to be a public company, OTC, and the fact that they do have public pricing out there. So when we develop our regulatory agenda and the things that we feel are important to bring to your attention and to go to Capitol Hill with, a lot of it is coming from those kinds of misunderstandings. So there are really specific legal reasons why I think Steve and Bob are experiencing what they are with respect to brokers being able to take the stock, or insiders being able to sell, things of that nature, where there is a hesitance, there's a reluctance amongst compliance officers to interact with something that they're not quite as familiar with. And if it can't fit in your regular system, if it can't fit in your automated compliance check or your automated review, a person has to take time out and take a look. To Steve's point, you're going to get a little more scrutiny, and that's cost to the brokers or to the clearing firms. And so much of the machinery of how this all works is really impacted by, I think, things like SEC interpretations, to answer your question about what would be most helpful. Really speaking about what an OTCQX company is or what it is to trade OTC, and putting that on par or comparing that to a NASDAQ or New York Stock Exchange listing, so that the rest of the industry really understands. Reg A is a fantastic example of that. We may get into certain specific offering types, but when we have seen Reg A offerings, and when we saw them really in the early days of Regulation A, compliance officers from clearing firms would call us and say, there is not a chance, what is this? There is not a chance we're taking it. And we would walk them through the way the rule set up, and we would walk them through the fact that the law dictated that these were free trading securities. And once they got a comfort level, they became, and those specific brokerage houses and clearing firms, they became more comfortable interacting with the stock. So there's a lot of legwork involved, and where the SEC can help is by really promoting that to the industry and helping us get those messages out.
Absolutely.
There you go. Now I'm going back into question mode.
You can be the moderator again.
All right, I'll switch roles. You know, there were some questions that have come in already from the audience, and I'm not going to read them out specifically, but there are questions relating to liquidity, which is a topic that's already come up. And so maybe I'll throw that out to the panel as well. When you're interacting with investors, when you're thinking about you know, things like capital raising, to all of your points, but just your experience as a public company, how much is liquidity a metric that you track, or that's important to you, or that you feel is important to your existing investors and prospective investors?
Well,
I'll go. I mean, I would say it's incredibly important. It's the reason why we did this, is to have liquidity. That's why we are on QX, is to have that market. And while we don't have a ton of shares trade, we could have no shares trade in one day, and we could have 10% of our shares trade the next day. Believe it or not, we've had that much volume go through. So, I mean, as long as there's active buyers and sellers out there, we generally don't hear a lot of feedback about trades not getting matched. Every now and then it happens. But in general, when we put orders out, they get filled. And I personally put orders through a national brokerage house. So I know that there are plenty of national players out there that take the stock, hold the stock, trade the stock, which has been great. And I know that we all use kind of different houses so that we can see how each one treats it differently. And when we get into proxies and annual reports, I mean, it all works just like when I get my proxy from IBM, I get my proxy for First Resource Bank, all through online. And it's kind of, you know, it's been an interesting experience as we started this company from nothing to kind of feel like we're on the same level as those guys. It's you know, it's like a real company, right? It's a real bank. It's a real publicly traded stock. We're not SEC, but we have all the other things that go along with it. So we definitely saw our liquidity go up a little bit when we went from pink to QX, and it's something we've been actively working on. But I think the real metric there is, do you have trades? Are you hearing from people that are putting trades out that aren't getting filled? And in general, we feel very good about the trades getting filled.
So I won't go into a ton of detail, and I'm going to open this up to Steve and Bob as well. But maybe for background for folks listening in, the way an investor can interact with the stock on OTCQX is really the same way, if you think about the retail experience, they interact with a NASDAQ or New York Stock Exchange stocks. You would log on to your E-Trade account or Schwab or whoever might be left after they all buy each other, and type in the stock symbol and be able to submit your order. And to Lauren's point about, you know, whether trades are getting done, the way our system works is intentionally a little bit different than how you see things work on an exchange, where brokers are publishing quotes and communicating with one another across our system, because in stocks that might not have the same amount of natural liquidity as Apple and Google and Microsoft, you want and need that communication between brokers who can provide proprietary liquidity, who can source additional retail liquidity. And so I am hopeful. I think every company's experience may be slightly different, but I think that may be part of the reason why, Lauren, the experience you're relating may be more common than people might expect of a company that trades OTC. But I'll fade back into the background and open it up to Bob and Steve, just to hear your thoughts on the liquidity experience.
I jump in here. On the liquidity itself, it's for Sono-Tek, it is one of the prime focuses. I mean, we're not always looking at stock price because we're always working here also. But in the grand scheme, if an individual comes along and they want to invest, I mean, their liquidity is important. Our stock does trade, the price varies. And what we've done is we're starting to go out and do more press, more media, but that is only, we can only do so much with that. And the key is, it's the visibility of our stock on the OTCQX, which is always going to flow back to the larger houses. They may not see us, and they refuse to look at us, or whatever it might be. I'm just throwing this out there. But the investor should have the ability to go along and say, okay, yes, I want to do this with this stock. We are working on it. We're always working on it. And one of the key things are we put up good numbers every quarter, every year. There's some up and down on the stock price, and sometimes you don't see the value, but we are working on it internally, because it's not just the external investors. We do have company employees who have options, and they have the stock, and they've got to see that what they're working for accounts for something. So it is a very big focus for us here at Sono-Tek.
And we're in the same situation as Steve. We have a lot of incentives.
On my phone.
But our situation, so part of it is self-inflicted, because we have 9.3 million shares on a fully diluted basis. About 3 million of those shares are in the public float. And of that, most of it doesn't trade. It's tucked into drawers and safety deposit boxes and doesn't come to the market. So similar to Lauren, we'll have days where there's no trading, and then we'll have 180,000 share days. And everything in between. So it's very neurotic and sporadic. And as a result, we see our bid-ask price almost $1 at times. So inefficient in terms of the bid and the ask, and consistency in volume are our biggest challenges.
Sure. We talk a lot, and this maybe goes to the question Martha was asking earlier too, when we hear from folks generally, that with smaller companies in particular, there may be less of a drive towards liquidity because of exactly what Bob is talking about. People like the stock that they hold. They're familiar. You know, Lauren, at a community bank, your shareholders may be depositors. They may be people that understand the business that you built, and they don't necessarily want to trade it on a regular basis. And so there's a lot of good that comes of that, of them knowing they have this market and this liquidity that they can access, but not necessarily doing it. And it's not this massive proprietary trading operation that you'd see in an S&P 500 company. So we definitely hear that from folks as well. As this moves along, I'm going to move us along a little bit on some of the topics that I think we wanted to cover. I do want to hear a little bit about your experiences reporting. I think you've all kind of touched on that. But even more so, let's get into some of the regulatory challenges that you all face, maybe as a result of being on OTCQX or being a smaller company, or just things that have popped up more generally. Maybe Lauren, I'll start with you as a bank, that people may not be as familiar with the way in which you report, except for knowing that banks are among the most highly regulated firms out there. But curious if you could relay a little bit more of your experience reporting as a bank, and then what issues you've run into, and even more specifically around COVID and PPP and things that have impacted banks maybe more than others.
Sure. So from a reporting standpoint, banks file a quarterly call report with the FDIC, and a call report is a rather extensive document. It probably approaches 100 pages of very granular, detailed information, and every bank in the country files it quarterly. So we were already doing that, and that satisfies a large part of our OTC reporting requirements. We were already doing quarterly press releases, and we continue to do that. We've expanded them a bit over time, but basically our report burden has been things we're already doing. Our proxy statement that we were already issuing, we upload to OTCIQ, and really at the end of the day, it was no extra administrative work on our end to have this listing. As a bank, COVID affected us greatly. I was talking a little bit in the pre-session about PPP and the additional burden that was put on us with that. We really looked at it as an opportunity. So we embraced the opportunity to help small businesses just like ours. And it was really great to relate to them on the same level. My company only has 52 employees. So I'm right in the trenches with a lot of my customers who are similarly small sized, and they look to us for help. And some small companies bank with behemoth banks that they couldn't even get through the phone lines on the first weekend to even get an application. And it was really a great experience doing exactly what we're supposed to be doing. We're a community bank. We did 36% of our PPP loans were for new customers, so people that were new to us. So that was just a great way to just kind of talk, not just talk the talk, but walk the walk. And we did not need the extra volume, but we were happy to take it on as we retooled everything we did in the bank, kind of dropped it all in one day. And I had accountants doing loan documents, and everybody was doing a different job. And there was probably 80% of the bank that was working on PPP at one point. So, you know, and again, to a point you made a little bit earlier, Dan, about like my shareholders, a lot of them are customers. I mean, I do have institutional shareholders as well, but you know, back in the day, if there was no market like what we have for here, you would have all this pent up demand. And I've been a shareholder for 15 years. My kids are going to college. You know, we're going to have to sell the bank so I can get my money back. To not have to have a liquidity event like that allows us to keep serving our communities and do what we do. So that's a huge relief for us to be able to keep operating the business and grow the business and not have that pent up demand for people to be able to liquidate their stock. That's my soapbox. I'm done.
I appreciate it, and just wanted to give a quick thank you for all that you've done, flipping your normal day-to-day model upside down to serve the many businesses who needed capital on an emergency basis. So thank you for doing that.
Yep, it was great.
Bob, I may turn it to you. Yeah.
No, I was going to say we're an alternative reporting company like Lauren is. We obviously we're in the restaurant industry, so we don't have requirements. But we file exactly what we filed when we were traded on the American Stock Exchange as a full SEC reporting company. The only thing we don't do is the new Sarbanes-Oxley compliance pieces. So those are external and internal. So we do annual audited financial reports, quarterly reports, you know, material information. Where we always get stuck with broker dealers is in this rule. And I'm going to screw it up, 15C to 11. Is that right, Martha?
Nicely done.
That rule is very difficult for broker-dealer compliance to link up with the OTCQX companies that are alternative reporting. And that is a big issue of contention between ourselves and them. And it creates a lot of illiquidity for our stock. The fact that we cannot sell, insiders cannot sell in the stock, directors cannot sell in the stock, all because of this rule 15C to 11. And you know, if I ask the SEC, do we qualify? The answer would be, or at least our SEC attorneys, the answer is yes, there should be no problem. But there is a problem once you get to the broker dealers, because they have guardrails that are tighter than the specific law of the SEC. So there's a miscommunication there that I know you were working on and aware of, but I just wanted your audience to be aware of that as well.
Absolutely. It's great feedback to hear, Bob, and it's something that we've been hearing quite a lot about, particularly since we put out a proposal in September with change rules. We've heard a lot from Dan and his colleagues with some thoughtful suggestions on ways that proposal needs to change to address some of the ways that this plays out in practice. And I do think it's always one of the things that I love about conversations like this is the conversations where we blend what's required from a regulatory perspective within the business practice and the compliance regimes that many on the outside put together, because it automates in a lot of ways and it lowers their costs of not manually processing and going through decision making. And sometimes there's a mismatch there and it can create some real pressure points. So I appreciate you flagging those and being willing to speak to them today. And Dan, to the extent, I'm not going to make you back into a panelist again, but if you did want to weigh in and share some of the perspectives with those who've dialed in on 15C to 11, I don't think it's going to require a lot of prodding to get you excited to share that feedback, but just wanted to make sure you felt fully at ease to do so.
I just want to make sure everyone has an additional hour, ready so we can really get into what we need to get into. So 15C to 11, and again, I'll provide maybe a little bit of background so everybody knows what we're talking about. 15C to 11 serves a couple of purposes. Its kind of primary purpose is its action on broker-dealers, so that before a broker can quote a stock on a market like ours, so basically anything off exchange, broker has to have a certain amount of information in their files. That's just for the initial quoting. 15C to 11 lays out what that information is. So that can be things like SEC reporting, It could be things like Regulation A reporting, foreign company reporting, or what they describe as a catch-all bucket, where they have an enumerated list of things that a company needs to make publicly available in order for that quote to take place. So that happens when companies are entering our market, and we have a lot to say about that, but I'm going to fast forward a little bit to the use case that Bob was raising before jumping back there. The other way in which 15C211 interacts with the market is that when, and Bob talked before about doing Reg D offerings. So when you do a private offering, it has a seasoning period. So once it's held by the buyer for a certain period of time, and for a non-SEC reporting company, that's 12 months, it is then allowed to be publicly traded. Insiders and affiliates have some additional obligations under what's called this Rule 144 that provides for all of this free trading. And one of those obligations deals with having the information available that's called for under 15C211. And so while a company like Bob's is a great example of full and complete disclosure, the audited financials he talked about, the quarterly reporting, the material news, all the rest that you would expect to see, 15C211 includes a couple of provisions that are very specific to the actual quote being made. Because remember, the first kind of line that the SEC touches with 15C211 is that broker-dealer quote. So it's impossible for Bob, as a company, to indicate the specific broker or the specific person that's behind a quote in the security, and to make that public ahead of time. So it's little intricacies like that, where that part of 15C211 is clearly not what is intended by making sure information is publicly available under 144, that catch somebody like Bob and his company and many others in the same situation in this, a bit of a catch-22. 15C211 more generally, in the way that Martha was describing under this new proposal, is really looking to, or the SEC really through this proposal, is looking to encourage additional disclosure from companies across the board. They are thrilled, I think, I'll speak for you, Martha, you don't have to back it up, but thrilled with the kind of disclosure that OTCQX companies provide. But there are others who aren't meeting that standard. And so the real purpose of this reproposal is to try to incentivize those folks to either get their game where it needs to be and make the appropriate disclosure, or no longer be available for retail investors, so that when a retail investor is interacting with the stock, they know they're doing so with all of the appropriate information. There are a lot of nuances that go into how that works. You know, we at OTC Markets are pretty well positioned to help be a resource for brokers and others, because we capture all this information, we make it publicly available, we let you know that a company has qualified for OTCQX or OTCQB or is otherwise current. And we're hopeful that sort of service going forward will help crystallize what the SEC needs to see. And when we come with a final rule, we'll find out exactly how much of that resonated. And that we'll also be able to provide the kind of trading experience and best execution and price discovery that investors have come to expect, even when a company is not making information available. That should be flagged, and that should be absolutely treated in an entirely different manner, kind of to Lauren's point about pink versus OTCQX. But if an investor calls their broker and needs to buy or sell a security, they still need that electronic trading experience. So we've weighed in that way as well. That's the fastest I've ever covered that topic. So I will stop it there.
You're whittling it down. So you're going to have it into just a single tweet.
Exactly. That's the character limit at work. So Martha, let me flip it back to you, because our time unbelievably is kind of nearing an end. From the SEC's perspective, or from your perspective, what are the kind of hot button regulatory issues that you're hearing about, or that you'd like to get kind of a take on from the panelists here today? Because there's more than enough to go around. I know that.
There are plenty. Hot button, we have a lot. And I think that what's really exciting, if you look at the agenda at the SEC, there is a lot that we have taken on, and there is a lot that we are pushing to get through that is on the short-term agenda that we are trying to accomplish right now. Some of them we've touched on. We talked about 15C211 a little bit. If you paid attention this morning to the SEC, you saw that the final proxy rules came out this morning. That has been certainly a hot button issue that people have been very interested in, for those that are a part of the proxy world. When we're looking back at earlier stage capital raising, and we did not, we've, I think, said the words Reg A, but we haven't really talked about Reg A offerings, and we talked a little bit about Reg D, some of the ways that capital is raised through exempt or private offerings. We put out last summer a concept release that asked for open-ended feedback on direction that we needed to take. Overwhelmingly, the feedback was keep the general structure that we have. Don't throw the whole thing out and start from scratch, but fix these areas of friction. And so we put out a proposal in March soliciting feedback on a proposed framework for ways that we can reduce areas of friction and improve the efficacy of the different offering tools. So I mean, to Reg A, one of the things that was done was proposing to increase the amount of capital that could be raised using that tool in response to a lot of feedback received, as well as changing up and harmonizing the disclosures that are provided to non-accredited investors, a number of different changes. That's one that's particularly exciting that I think, particularly for our OTCQX companies, that use a hybrid of these exempt tools as well as other offering tools. I think that that's one that'll be particularly interesting and of interest to get feedback from those of you who have paid attention to, not putting anybody on the spot on that one, but if you have been paying attention to it and have any feedback on ways that we need to be thinking differently about it. One thing that's critical, our rules don't change often. We're not in the business of coming up with innovating. I don't think you hear about innovative regulators, which is probably a good thing, that we're not out there trying to constantly tweak where you decide you want to go raise additional capital 6 months later and find out the rule book changed. It doesn't change that often, which has some consistency and predictability, but there are some things that are primed for change and updates. So there's a lot on our plate. I don't even know how to go about covering all of it, Dan, but I'm happy to take any questions or any feedback from Steve, Bob, Lauren, or you, Dan, on some of those different areas that we're working on at the SEC.
That is a very nice overview of what I know you all are thinking about, and OTC Markets has put in some comments on the exempt offering framework as well. So maybe, I know Martha said she wouldn't put anybody on the spot, but I might a little bit. Bob, just because you have talked about, Reg D and exempt offerings a little bit, and we've talked about some of the challenges of being an OTC traded company and how that relates to capital raising as well as some liquidity issues. So things like expanded access to Reg A, whether that's raising the limit in terms of how much money you can raise, or when you're looking at Reg Ds, there's been a lot of discussion around changing the definition of the type of investor, the accredited investor that can participate, to make that more expansive. Are those things that are on your radar as you look at Reg D or Reg A or other capital raising tools?
Well, it kind of goes back to the broker-dealer universe. What are they comfortable working with and through? And we've looked at Reg A Plus several times. And as I mentioned in the conversation, the timing was always such that we have small tuck-in acquisitions that every time we've started down the A+ road, we've 6 and 9 months before it qualifies with the SEC. And that timeline for a small company doing a small transaction is forever, right? In our view. And we always kind of, the fallback is a Reg D because it can be done very quickly, but we can't get broker dealers to participate, so we're kind of on our own again. That's been our experience. Full cycle.
Yeah. And I think that bringing it full circle, that comes back to the same considerations we were talking at the beginning about the fact that you have to look at, your cost of capital, your timing of capital, how much you can raise, kind of how much effort are you going to have to put in as the company versus being able to rely on someone else to help facilitate those transactions. It definitely changes the calculus of which pathway you take, and Reg D remains far and away the most popular tool to raise capital in the exempt markets, far above and away any other exemption because of the relatively few areas of friction. So, Bob, I appreciate you sharing that feedback, and I think it's certainly helpful to hear about ways that Reg A could be improved both on the business side and on the regulatory side.
I'm going to throw one more direct question, put somebody on the spot kind of question out there. We've talked, Lauren, just to prep you, this is coming to you. We've talked about the different kinds of investors that you have as a bank, whether that's some retail, some kind of local investors or institutions, that, the type of investor that can get involved in a new capital raising or expanded access to capital raising is a big topic as well. Along with that comes somebody in your position as the president of the company, understanding who your shareholders are. And so there are proposals out there, even outside of just the expansion of access to capital, things like 13F, which talks about being able to find out who holds your stock at an institutional level. I'm just curious what your experience is with kind of having a look or having some insight into who your shareholders are and how you feel about that.
Sure, and thank you for that softball. I appreciate it. For 13F, it's kind of one of the things that really frustrates me the most, really, is it's hard to explain to, my board of directors that we really have no idea who owns our stock. And I think that from a transparency standpoint, when I have a local depositor who wants to buy my stock because they love our story, they love our service, I think it's material information for them to know if I have institutional holders that own half the bank and in whatever pieces. So I really wish that 13F would apply to QX stocks, and I know it doesn't currently. And of course, the proposal that's out now is only going to limit 13F reporting going forward as they raise the cap. So I think that's moving in the wrong direction, and I can't imagine in today's world that less transparency is ever better. But that's my 2 cents.
Yeah, Lauren, I appreciate you flagging that perspective. And one thing that I will say, I would encourage you to comment on the proposal. We've already gotten, I think that last I heard from our Office of the Secretary, in 2 weeks, we had over 1,000 comments that have come in on the 13F proposal that came out earlier this month. But please do share the perspective that you have on ways that this does impact your access to capital and how you're engaging with your shareholders, because it's really important that we hear those perspectives. And certainly, I think that this is one of those examples of, the SEC looked at some financial thresholds that have been around for a long time. They adjusted them back to what they would have been to cover the same percentage of the market. And we're hearing a lot of feedback on the consequences of that and what that actually would look like playing out, that it is not just about reduced regulatory burdens, but that it has other ripple effects on how companies interact with their shareholders. So it's valuable feedback, and it's feedback that we need to hear. So I'm not trying to give you homework after this call, but would love for you to submit a comment letter and share that perspective with the commission.
Will do.
Lauren, we can talk about that too, because chances are OTC Markets is going to have a letter or two in there as well on that one.
Great.
We have just a few minutes left. So Steve, I don't know if there are particular regulatory issues that you wanted to address, but I certainly wanted to give you the opportunity to do so. And then for the group generally, if there's any closing commentary that anybody wants to make, I think now's the time, and want to make sure we get as much as we possibly can in.
No, I have 1 or 2 issues. Like I said, we're a registrant. We filed 10Qs, 10Ks, 8Ks, and as you go through these, there's a few different twists now and then. We do the gap, of course, but the SEC always has their own little requirements that have to find their way into the reporting. The biggest thing always, what we come up against is how much do you really need to put out there? How much do you need to disclose? Okay, it's not a bad thing, but we go through all of this. We do all the time, every year, and yet I'm going to come back to the fact that we don't really get the bang for the buck, where I'm doing the same job as the guys at Coca-Cola for the reporting, and they're out at the big houses, and we are not, because we can't be. And so it's the disclosures always come through, how much, but it'll always go back to, what are we getting? We do the work, but the goal is always to have more ability for the stock, and anybody's stock on the OTCQX. So it's somewhat of a miscarriage there, but that is what we're always up against. So as it flows.
Oh, look, it's an appreciated perspective. I think that's really what this whole panel has been about, to make sure that people understand those perspectives. There are so many other issues that we didn't touch on. We didn't get into state issues and you know, the work that all of you have done in conjunction with us to get states to recognize the disclosure on OTCQX. There are any number of other SEC reporting issues as well. There were a number of questions submitted, and I tried to get the flavor of some of the questions in as we went along. But we are at 4 o'clock, and so we're not going to go through them on an individual basis. We'll distribute them after. We can talk as a panel later and see if there's some additional information we can provide to the audience. I want to thank all of you. I want to thank the people behind the scenes from OTC Markets, Christy Harkins, Cass Sanford, and Josette Menge from the SEC, Julie Davis, and Jenny Riegel, who are here monitoring and making sure this actually all sounds and looks the way it's supposed to. Thank you to each of you, to Martha for including us in your kind of tour of these virtual coffee breaks. It's very much appreciated. To Lauren, Steve, and Bob for this and all of the other advocacy work that you do, telling your story and being a part of the OTCQX community. We appreciate it greatly. If anybody has a closing comment, I think we have another few minutes before this cuts off. So speak now. Otherwise, I will thank you all very much for your participation and look forward to continuing it sometime soon.
Hey, Dan, I just wanted to say thank you and to encourage those who have questions or that didn't ask questions and you were thinking, wonder if I can talk about this offline, to reach out to our team. We want to hear from you. We actually, of all of the groups that we reach out to, it is probably the hardest for us to get in front of the OTCQX and smaller public companies because you have so much on your plate and each of you wear so many different hats. And it's understandable that prioritizing talking to regulators is not necessarily as high on the list as running the business day to day. But I really do want to make sure that we hear from you, we know what issues you're facing, and that we work on addressing those solutions, and that you empower us to speak with really good clarity on the issues that you face so that we can work on solutions there. So reach out to our team. We've got online presence, sec.gov/OASB. You can email smallbusiness@sec.gov. We are happy to host virtual meetings, and when we do resume in-person meetings at some point, hopefully in the not too distant future, would love for you to come and visit us in DC, and we will gladly play host in a windowless conference room. But thank you all for joining us today. It was wonderful to get a chance to do this, and I appreciate everybody on the OTC Markets team making this happen. And Steve, Bob, and Lauren, thank you for being wonderful co-hosts today.
Thank you.
Great, thank you.